Okie dokie. Okie dokie, everyone. First of all, can I wish every single one of you either a good morning or good afternoon or good evening, depending, of course, where you are around the world. First of all, thank you so much for joining me on tonight's little webinar, which we'll be doing on risk management. Or shall I say, how I started to learn about risk management. Written by yours truly, myself, of course, James Trescothick, who's the chief trading educator here at Stratton Markets. Now, before we get on to a bit of more of an introduction on myself and tonight's agenda, of course, we're talking about online CFD trading. And like with many investments, it carries a great deal of risk. So I do suggest you do your own research and due diligence and know the risks at hand before entering any trade. Now, with that out the way, this good-looking chap, I'm lying, of course, this hairy, bearded-looking person here is myself. Like I said, my name is James Trescothick. I am the Chief Trading Educator here at Stratton Markets. I have over 20 years experience in the financial service industry. I actually started out at the prime age of 18. I'm now, unfortunately, 40, but never mind. And I actually started off in the industry doing mortgages, and actually as a mortgage broker. Then I became a qualified IFA where I specialized still in mortgages, mainly in commercial and buy-to-let properties, before moving into pensions and alternative investments. I then moved into the online arena of Forex trading, and I've actually traded myself with the Dubai Gold and Commodity Exchange. I've also ran a floor at the Philippines Stock Exchange. And like I say, I went into portfolio management before then, of course, going down the line of education. I'm indeed a published writer, and I've been published in several leading publications, including the likes of the Financial Times, Advisor, Market Watch, several newspapers, and several magazines. And I am an avid market commentator, and I have been, told or suggested that I do like the sound of my own voice, so don't hold that against me. And I'm also a well-known public speaker, and I've spoken on several industry events around the world. And like I say, people do say I like the sound of my own voice, so there we go. Now, like I said, tonight's agenda is all about risk management. So we'll start off, first of all, talking about why risk management is so important in what I call a very noisy world. We'll then discuss, and we'll define exactly what risk management is, because a lot of people, when they talk about risk management, they get confused. They think it's just simply setting stop losses and take profits and that sort of thing. Though that has a large part to play in risk management, that's not what really risk management is, in a nutshell. There's a lot more to it than that. Then we'll talk about different ways to make up a risk management program. Then we'll go on to the highly talked about and suggested reward risk ratio, followed up by up and coming educational events. Then, of course, we'll do the usual question and answer session at the end. So if there's any questions, please feel free to ask me at the end of this brief little presentation. So why is risk management important? Why is it important? Why do people talk about it? Why do people always suggest, what's your risk management program? Well, let's face it. This world, I'm talking about online trading, of course, is incredibly noisy. We have our charts. We have our rates flashing at us. We have our order ticket blinking and telling us and tempting us to jump into the market. Then we have breaking news, headlines being broken every few minutes. Then we have market alerts, things telling us things are moving, things are happening. Then we also have our financial calendar and fundamental events happening. And at the same time, chuck all that in, we've also got our technical indicators. So there's an awful lot of visual noise coming at us really, really quickly, which can basically make ourselves lose control of ourselves and, maybe act in a way which is probably not for the best. So risk management is really what is needed. And there's me, by the way. I thought I'd show myself for a change. It's really what's needed to try and give yourself a disciplined approach to when trading in this market. So risk management in many ways is essential. Okay. Because even the most talented trader with the most keenest of eyes for spotting the most ideal investment opportunity can still blow their entire trading account in 1 or 2 trades. You can still have, in fact, 90% winning trades, but still be on the negative side without proper risk management. This is why risk management is, as I said before, essential. Because risk management, in many ways, is a simple idea and can easily be adopted. Now, so, we say that is easy, it's easily to be adopted, it's simple, but what actually is it? And like I say, it's not simply a case of setting stop losses. Risk management actually takes into account, no matter how good you are, no matter what you do, that you will, at some stage, occur a loss in your trading. Every trader loses a trade, okay? So it takes into account straight away that at some point, you're going to have a losing trade. Now, the point of risk management is to try not to stop you from losing a trade, but to try and protect your personal trading account from losing everything, from basically being wiped out. This is the point of risk management. Not to prevent loss, because a loss is going to happen. It's there to prevent you wiping out your entire account. That's the whole point of risk management. Because risk management is a method to control your risk exposure. As simple as that. So what makes up a successful risk? It's easy for me to say. Let's try that again, James. What makes up a successful risk management plan? First of all, a trading system. Second of all, is controlling one's emotions. That is extremely difficult. We'll discuss a little bit more about that in a moment. And thirdly, is money management. So those 3 things make up a very successful risk management plan. Let's break them down one by one. Now, a trading system. An effective trading system is a set of very strict rules, okay, which you keep to, no matter what, you stay to. Now, these sort of rules can include a specific entry or exit level, or it could be in relation to a direction of a trend. For example, your trading system can be based with, I'm going to follow the trend and I'm going to be a position trader or a trend trader. Or your trading plan could be more like, I'd say I trade on a ranging market. But it's a very strict set of guidelines which you stick to. Now, maybe this plan can also include possibly certain indicators, which happens to work for you, okay? Because not all indicators work for everybody. Maybe you've discovered some indicators work for you better than others. So this is what you put into your plan, and this is what you stick to. Now, how do you devise such a plan? Now, one useful technique, which again, I've talked about a lot, and I do believe in it, okay? Because I don't know, other people who've been on my webinars before, they know about me sort of going back to basics, like the old days, where you used to write down your trade or your order first. But I believe this is a good system of devising a plan. And ignore the text, ignore the writing you have in it. Okay, it's just made up stuff. I just made it up just for the point of illustrating what I want to talk about here. But one good way of trying to devise a trading plan and what works for you is keeping what's known as like a trader's journal, a trader's diary. And the idea is you fill in this, just make like an Excel sheet, or, if you're old school like me, pen and paper will do. You set up like a little table. And in this table, you include the likes of obviously the date, the instrument, the direction you went in the market, long or short, buy or sell, etc. The entry level, the stop loss, and take profit, and the reasons why you've gone into that trade. For example, again, I've just written, this is complete nonsense. This is just something I've added in just as an example. So, for example, in this example here, I put reasons for this trade. I'm short the euro dollar. Super Mario, which is obviously Mario Draghi's press conference, he's expected to be dovish, as in scared. RSI is at 78, testing key support at 1.16003. So for my example in this, that's the reason why I've entered that trade. Okay, so the idea is you write this trader's diary, you jot this all down, and the idea is you write this down first before you actually enter the market. The reason why I suggest this, or I say this is a possible way, you could possibly look at it, is because it takes away a lot of the emotions of trading. You think about it rationally. But anyway, by keeping a diary like this over time, you then can see what system works for you. Okay, and plus at the same time, it gives you guidelines and strict discipline to keep to devise a plan. So this is what I tend to suggest as a way of trying to devise a trading plan, is using something simple. It's like a simple Excel table. As long as you have like the date, instrument, the direction, entry level, stop loss, take profit, and your reasons why, you can then look back over time and you've then basically on your way devising a trading plan. Controlling your emotions. Let's face it, trading is exciting, isn't it? And as we always said, it's a very noisy world. We have a lot of things coming at us left, right, and center. So when something is exciting, we get emotional. We get very emotional. And this is how we tend to sometimes make mistakes or lose our way. Now, let's be totally open on this as well. Let's face it, okay? Trading on demo accounts are totally different from trading on live accounts. Why? Simple. Because demo accounts, the money is not real, which means your emotions that you go through on a demo account is not real. So if you really want to try and control your emotions and discover the emotions of trading, obviously you're not going to be learning to do that by using a demo account. Now, this whole thing, and I'm going to touch on one of the biggest battles that every trader faces, and we'll go through this. It's the strongest or most difficult emotions to fight, and every trader suffers from this. And it's called the battle between fear and hope. And let's talk about this. What is fear and hope? What is the battle between fear and hope? Now, excuse me. Let me tell you a story. Imagine this. You have a winning trade in the market. You're winning. Profitable trade. It's in the green. And straight away, you get that happy feeling because you're winning. We all love it, don't we? It's a happy feeling we're winning. Then what sneaks in is fear that all of a sudden the market will turn against you and that happy feeling will disappear. So what do? You snatch at that profit. You snatch at it, making a very small gain. Let me tell you another story, a different scenario. Now imagine this. You have a losing trade in the market, but this time you don't close it. No. You don't close it taking a small position, no. Instead, you keep that position open, hoping for the market will turn around in your favor. And guess what? It doesn't. Instead, that loss gets bigger and bigger and bigger until you're either tapped out or you're taking a lot bigger loss than you needed to do. So here's the two scenarios. You got the small gains and you got the big losses. Now, if you look at the majority of trading accounts, or maybe indeed even look at your own, you could see a large majority of winning trades, but the account is still with a negative balance. You can have, in fact, 70% profitable trades. However, if you're unable to swap fear and hope around, the chances are your account will be negative as the gains will be small and the losses are large. Now, this is what you need to try and do, and this is the most difficult. It is, Dennis. I've used this one before, my friend. Is it, Dennis? Let's talk at the end, but I don't know if you've used this before. But yes, if like I say, what you actually need to do, okay, is you need to turn hope and fear around. So when you're in a winning trade, you need to hope that it goes higher. When the market is going against you, you need to be fearful that that loss is going to get bigger. And like I say, this is the most difficult thing every trader goes through. And so many traders are unable to break this. You know, like I say, even so, say, for example, you're able to swap it around and at the same time you have 30% profitable trades. And if you're able to swap hope and fear around, or if you're able to swap hope and fear around, the chances are your account could be in the green, okay? As your successful trades will be larger than your losing trades. So that's one thing, controlling your emotions, swapping around the battle of hope and fear. The next one on building your ideal risk management program is, of course, money management. Now, the crucial element which will help you with both your trading plan and controlling your emotions is money management. Let's face it, your trading plan, first of all, will be based around money management. And one of the best ways of controlling your emotions, let's face it, is basically controlling your losses. Okay, so that will control your emotions. Because I say, if you're losing heavily, your emotions are going to be all over the place. So money management is going to help you with your emotions as well. Now, money management takes into account several things. The size of your account, as in how much money or capital you have in your trading account, the positions you trade, the leverage you trade with, the stop losses and take profit levels. Now, the right management program looks into long-term gains, not get-rich-quick dreams. And again, it imposes strict risk guidelines, okay? Because anybody who wants to make, 100% profit in one trade, barking up the wrong tree, okay? That's not trading, that's gambling. And as we all know, gamblers, eventually they lose, they run out of luck. So right management program looks at long-term gains, so smaller gains, medium-sized gains over a longer period of time. Now, these strict risk guidelines in your money management should include, like I say, the size of position you're trading. Okay, if you've only got a certain amount in your account, you shouldn't be trading a lot, one lot, you know. You should be trading micro lots or mini lots or half a lot or a quarter of a lot. You should be trading small position sizes. Again, you need to consider maybe hedge trading, doing some hedging, you know, where you take multiple positions, but at the same time in opposing markets. So though one of the traders losing, at least you're locking, you know, you're controlling some of your risk by the other trade. So look at hedging techniques. Setting stop loss and take profits. So many people don't do this. They let the market flow. And before you know it, again, it's not a case of controlling your loss. Your loss gets bigger without setting your right stop losses and take profits. Knowing, again, this is going back to hope and fear, knowing when to accept that loss and to walk away. Now, calculating, that's easy for me to say again, calculating the right amount of capital to risk. Now, the amount of risk per trade should be, again, like I say, based upon your account size. The usual rule, okay, is between 1 to 3% of your account balance on one trade. Now, that doesn't mean that you open a trade with just 1% of your account balance. It doesn't mean that, no. What that means is you can still use the amount you have or what sort of amount you have in your trading account is, but you set your stop loss at 1% of your account balance. For example, if your account balance is, say, $30,000, you decide to open a trade with $29,000 as your margin to risk. But you set your stop loss to a maximum of 1%, which is $300, not the full $29,000. So calculating the risk doesn't mean the amount of money you're putting in the market. It means where you set your stop loss to protect yourself. Again, like I say, risk management is about making sure you don't wipe your account out, not preventing a loss, wiping it out. Now, risk-reward ratio. Excuse me. This is another thing, obviously, which becomes part of risk management as well. Every trader, like I say, will always have a losing trade no matter what, because no one is bigger than the actual market. But one way to strike the right balance is try to use a risk-reward ratio like 2 to 1. So basically what I mean by that, your reward is 2 and your risk is 1, or your reward is 3 and your risk is 1. By applying a risk-reward ratio, your winning trades, in theory, should be at least double than your losing trades. But this is not enough, okay? Because your risk-reward ratio still needs to be disciplined. So you still need to be strict with yourself. Now, let me give you an example. If trader A, for example, is aggressive and he uses 60% of his capital and sets a target of 120% return, and trader B is less aggressive and uses only 5% of his capital with a target of 10%, who do you think is going to be a more profitable trader? Who's going to be the most profitable trader? The aggressive 60% at risk, 120% return, or the 5% with a target of 10%? The answer is more likely is going to be trader B. Why? Because again, he's controlling his risk or what is in the market, and he's setting his expectations lower. Anybody again going in looking for 120% return, 50% return again, that size is likely to basically crash and burn. So again, risk management is all about controlling your risk and setting your expectations to a reasonable level. Now, this is a short and sweet. This is just part 1 of risk management, but let's talk about some up and coming events next month. I will be doing a risk management part 2 next month as well, but the September schedule will be released soon. Actually, I've got it here. It's fresh off the press. Just so you know, I've just written and started writing it today. 4th of September, we've got one coming up called How to Understand a Mind of a Trader, which is an interesting one. 11th, again, is a little bit more to do about this, but again, it's more psychology on how I came to terms with my losing trades. 18th September is going to be about how I come to understand channels and trend lines. That one I like a lot because I've done a lot of studies on channel lines and trend lines. So that will be very, very interesting for those who like technicals and things like that. Those who like to understand trends and looking for support and resistance, that would be a useful one. And the 25th of September, I thought for a change, I'm going to talk about stocks and what sort of information you can look at when you're looking to trade stocks. So that's just a little teaser of what is coming up in September. As well as that, very, very soon, I've mentioned this before, but we've just done a pilot and it's very well received. But we're about to release a new video series, which will be like a 3 times a week video series. It's called Your Market Fixed. Your Market Fix, even. We've just done a test run. It'll be released probably the beginning of September. You'll get it on like I say, Monday, Wednesday, and Friday. And it will be market related, giving you an upshot of what the papers are saying in the industry and what's happening. So that's going to be released in September. And I'm very, very excited about that. Now, if, of course, you want to speak to me, you want to email me after this webinar, feel free. You can email me, of course, at james@strattonmarkets.com. Or you can even follow me on Twitter if you like it, which is my handle is @jtruskothic. You can become of my many, many, many followers. Of course, I'm lying. I have a total of 46, but never mind. It's a unique following group anyway. I do obviously talk about the markets a little bit and drop hints of things which are going on and other events coming up. But please feel free to drop me a line or message me on that, etc. Now, before we go into questions and answers, again, don't forget, we've been talking about CFD and online trading. And like I say, like with every type of investment, CFD and online trading does carry a great deal of risk. And we've just been talking about risk. So please do your own research and due diligence and know of the risks at hand before entering any trade. Now, with that out the way, do I have any questions? So Dennis, it sounds familiar. Dennis, quick question for you then, my friend. Do you fall prey or fall down to the hope and fear battle? Is that something which you experience yourself? Because everybody goes through it. Everybody is a victim of the hope and fear battle, and it's one of the most difficult things to fight. Yes, yeah, you did. Yeah. Well, Dennis, you're not the only one, my friend. You really are not the only one. Like I say, everybody does it because it's it's an interesting fact. But the limbic system of your brain, it's the front lobe of your brain. Um, it controls your emotions, but it also controls your memories at the same time. This is why, for example, if we get burned by fire as a child, we fear fire and things like that. So it controls both the links, the memories and the emotions. And why it's so difficult is, of course, if we've experienced market activity, especially the hope and fear, we can experience that we've got a winning trade and sometimes it's gone against us. That's where we get fear come in. Same as when we've had a losing trade and we've kept it open. We then closed it when we first started. Then we see the market go up and go, we shouldn't have closed it or wouldn't have that loss. So that memory comes back. So that's why it's so difficult. It's a mixture of memories and emotions. But realistically is, you do need to try to swap the hope and fear around. And one way of doing it is the trader's diary I showed you earlier. If you can start writing down the idea of where you're going to go, the entry level, stop loss, take profit, and reasons, and fill in that box or fill in that table first before clicking trade now, that can indeed help by controlling your emotions, help you from jumping straight in and not thinking rationally. So that does help. Well, okay, no, you need to get over the loss. That's good though, Dennis, because losing is a part of trading. Okay, like I say, there is no chance you're never, ever going to lose. You're always going to have a losing trade. Okay, every trader has a losing trade. No matter how successful, how good they are, they have losses. So it's about controlling it and getting over it. Okay, learning from it and getting over it. But the whole point is losing a trade is okay, but losing your entire trading account is not okay. So this is what we need to try and learn and try and get together. Is there any questions for me? Anybody else want to ask me any questions at all? Anything you want to ask me? Okay, that's good. Excellent, Dennis. Very good. Can I ask you, Dennis, if you don't mind, what instrument do you like to trade? Are you Forex, commodities, stocks, or is there any currency pairs in particular, like euro, dollar, anything like that you trade? What's your favorite currency pair? Is there one in particular you like to trade? Everything is clear. Okay. Well, if there's no questions, did everybody find it useful and insightful? Did you find it interesting anyway? You're not sick of my voice yet? You trade oil and euro. Okay. I have a question then, Dennis, actually for you. Would you like, obviously, if you're breaking even, you obviously know oil and the euro quite well. But if you'd like, I could do a webinar specializing on oil or the euro. And this is to everybody, all the audience out there, actually. If there's any subject or topic or instrument you want me to focus on, then I'm more than happy to do a specialized webinar on that. It's not a problem. Okay, it would be good. Okay. Is it oil or oil and euro and both? Because oil in particular is looking very interesting at the moment. Because there's a nice Elliott wave. Interesting. It's looking interesting. Oil. I can maybe see a Elliott wave pattern developing on oil. Okay, I'll do one on oil, definitely. I'll do one on oil especially, Dennis. I'll make sure. But if there is any other topics out there for anybody else, please feel free to let me know. Okay, you have my contact details. You have my email. I hope everybody found it interesting and insightful. Please stay tuned and join me next week, next Tuesday. Okay, the first one in September. Dennis, I will definitely do one on oil. But can I just end up by saying thank you so much for coming tonight. Thank you so much for staying with me and not getting too bored. And Dennis, thank you for your questions and interaction. You're welcome, Dennis. Thank you. No, it's been an absolute pleasure. Thank you, my friend. Thank you, everybody, for coming. And Dennis, thank you so much for asking me questions and interacting. Till next time, can I wish every single one of you, depending where you are around the world, either a very good morning, a good evening, a good afternoon, or even a good night, depending where you are. Till next time, every single one of you, you all trade safe.